right. So anyway, um, yeah. So what a day yesterday. Everybody ate, and there was nobody short at all. And there's really nobody short overall in any of these markets. And I think that's what you really have to wrap your head around. In that, just look at the volume yesterday. I think we traded just barely over a million cars in the ES, and so what does that mean? That just means it was a low, and that's usually what happens, right? When we have these big rallies, it's usually not on an enormous amount of volume. It's usually on light volume, and it doesn't really go anywhere. But in this case, we actually killed it, right? Market went absolutely ballistic yesterday, and it was broad based. It was all over the place. Now the question will be: does it last? And I don't know. If I knew that, I'd go be on an island somewhere in Fiji. I wouldn't be sitting here doing this crap, right? I did okay yesterday, but I mean, I'm not ready to retire. So let's take a look at a few things this morning. I mean, because I'm not going to talk about yesterday. Who cares, right? Yesterday's done. If you were not long, you missed the boat. I'm just trying to get this dumb camera set because the streaming doesn't work. Let me see. I'm going to have to end this. Hold on. This sucks. I tell you what. I'm glad this app is actually going away. So anyway, let's get into it here. And let's look at some futures. I didn't do any futures. I was not standing in front of anything yesterday. No way was I standing in front of it. That would have been really, really foolish. Because they just tore faces off all day. And I'm not going to stand in front of that. It's not worth it. It's not worth the aggravation. There were a couple of spots where you could have said, yeah, okay. I did make a few marks like, yeah, okay, if we got up to 60-37, which, again, was a huge move, but we didn't get there, and then all-time great time highs. I do like R2 today. 631.75. That's not really a crazy move. I just want to change something here. Something happened on the way to the moon. Anybody remember that one? Oh, God. That caused a lot of controversy in my house, man. I had a bunch of boomers Anybody want to look that up? Something happened on the way to the moon. And I had decided one day, like, and it was right around Christmas time. And I had decided, let me, maybe my family will be interested in this, Here's a perspective that maybe we didn't actually go. And then it was the whole, and oh my God, did I just get, man, did I not, I read the room wrong. That's for sure. And oh my God, I got just absolutely ripped apart. I was like, okay, I guess I didn't read the room right. I sure as hell did not read the room right. And yeah. So anyway, look it up. It's actually funny. Like I equate it to, it's a perspective. Now I don't really agree with everything. Now there was a little like anti, we're going to the moon kind of vibe to the whole thing. I'm not going to question that at all. But the thing that I found interesting about, again, it was just another perspective, of what went on, and I found it interesting, which was not good. Anyway, so I like R2. So 60, 31, 75. It's right around where I have 60, 37. So it's kind of, a good spot. And it's R2. R2, D2. R2. So we're going to go ahead and mark this. All right. All right, and I'm just trying to get some stuff situated here. Just don't mind me. I'll use this. No, that's not going to work either. What the fuck? Hang on a second. What the hell is going on here? This crap. Use a bowl, maybe. I don't know. I can't get this thing set up right. I hate this freaking. I think I'll be happy when this app is gone because it is garbage. It really is garbage, and I don't feel like. I'm talking about. I'm trying to go live on TikTok here, and it's giving me all kinds of problems. It's asking me if, what my age is. And it's like, you know what? You have never asked me that ever before. And now all of a sudden you're going to ask me what my fucking age is? Like what the frick is that? Anyway, I'm just trying to get this thing situated here because they won't give me the stream key. And I refuse to kiss the ring like, oh, I need a stream key. Oh my God. And then, they want you to basically they basically want you to just like get on your knees and beg, and it's like, no thanks, dude. No thanks. I don't need it that bad. So anyway, just bear with me. I'm just trying to set my phone up so it doesn't fall all over the freaking place because I don't have a stream key, and I really want to. I have people on. I haven't gone live on TikTok in like 2 years maybe. I think it's been like 2 years. Because, I kind of like went anti, so just kind of hold on. We got everything set up. See? Wow. Yeah. I don't show my face. I don't need to, you don't need to see me in the corner. You know what I mean? You don't need to see me in the corner like, oh, hey, here I am. Yeah, whatever. Here I am. Let's see if this works. Does that work? Yeah, it does, but the thing's in the way. Oh, no, look at that. There you go. That's about the best that's the best I'm going to be able to do. So, anyway, if you want, I'm on YouTube. You want to go on YouTube, I'm on YouTube. Anyway, yes, 60, 31, 75. is, I think, a good short today, especially if the market meanders. And that is an S2. And today is a Thursday on January 16th, 2025. Right. Okay, so there you go. So that is R2, R2D2. Also, R3 is very interesting as well. I don't know if it's as interesting as R2, but I do like the spot above it. Now, that would be a massive move. That's like another 100 points away, but so I'm not even going to, anything can happen. It happened yesterday. 2 days in a row, though, I don't know. I expect I expect a lot of chop today. Now to the downside, if we start to sell off today, I don't know if I'd really step in front of it. It really depends on if we meander, like again, if we just kind of step down, then I would take. Then I may take one of these, but again, we have such a huge range because of yesterday that if we hit any of these points, especially on the support side, you're talking about a pretty extreme event today, which I'm not expecting that. I'm expecting a lot of meandering. I think it's going to be a chop house, in fact. So anyway, that's kind of all I have in the ES. I'm not going to talk about yesterday. Like everybody knows, everybody has the same chart. You can go look at it if you want. I don't want to rehash it. Everybody ate yesterday. So if you were long, you ate. The other commodity I want to get into here is natural gas. And I know, again, I always say it every time. Nobody cares, right? Because who the freak trades natural gas? Nobody. Nobody trades natural gas. And they don't. But you know what? You have to talk about it because it's a commodity that's at an extreme. And not only is it at an extreme from a price point of view, short term. Look, if you go back and look, natural gas has been much higher than $4, right? It was up near 9, I think, during 2020 time. But anyway, recently you could see it's been a massive run basically since the end of August. It's just been a moonshot. Now, you want to talk about returns. Here's one that's really kind of knocked the cover. Now, it hasn't been a glory ride at all. You can see there's a lot of cleaning going on where they're just cleaning the shorts out one after another. But that's what natural gas is doing, what natural gas does. So getting back to natural gas, let's look at, so what I got marked up on the chart here is what I've had marked up for a while. Based on what natural gas has done, you have a pretty high probability of selling options outside of this band that I have here, which is anything over 480 and anything below 280. That is a really good band to sell some options. And I had tried yesterday, and let's look at some natural gas options. I had tried yesterday to do I laid out that iron condor in February on natural gas, and I didn't get filled. And, that's what happens sometimes. I don't usually chase. So when I put something on, I leave it at the price. I leave it there for the day, and if it doesn't get filled, then so be it. It wasn't meant to be. I do not chase and feel like, I have to get in this like it's life or death. No, I want to try again today. And why am I going to try again today? Well, volatility is still up here in the high 60s, almost 70. Now it's been much better. But it continues to remain, if you look at volatility historically, it still remains high. So, there's definitely some juice still left in the orange, so to speak. So I marked out 280 and 480. So here's the 280 strike. Now, if you look too, what's also really cool about natural gas options is that the margins on natural gas options are a lot more forgiving than just trading the overall contract. Because if I want to just trade natural gas futures, if I want to do the big boy contract, you need 10 grand. You need 10 grand in margin. So, it's a big contract. So, I don't normally trade it because of that. And even day trading margin is outrageous on it. So you can't even they do have a micro one. I haven't really looked at it. It's just the MNG. So instead of NG and whatever the symbol is for the month that it's trading, it's just MNG, which is micro. And the margin's much, much smaller. It's a smaller contract. I think it's like $1.25 or some business like that. And but I haven't really looked at it. I just can't believe it's liquid enough. But I don't know. I have to look at it. Maybe it is. All right. So here's the 280, 480 strangle, and the 280, 480 strangle. You're going to use $1,600 worth of buying power. And this is what it looks like. Now, it's very wide, so it's going to be tough for me to pull this up on the Enalis. Yeah, it's going to be tough for me. It just barely makes it. Look at that. It's so wide. Now, look, the reason it's so wide is because I want it to be really wide, especially in natural gas, because it's not a very forgiving commodity. And so the strangle is actually going to give me a 74% probability of profit. Right? My beta weighted delta on the trade overall is actually just -2. So it's not really extremely bearish or bullish. It's basically delta neutral. I mean, you can't get much more delta neutral than this. Most important of all is this theta number at 51. Now, you don't normally get a lot of theta burn on futures. That's one thing I just want to make clear. You don't get a lot of theta burn on futures options as much as you do on underlying stocks. So just be aware of that, even though that's high. Look, that's good and that's high. Most of the theta burn on your futures options come in the last 15 days to 20 days. And then you might say, well, why don't you just wait and put this on then? Well, if I wait and put this on then, in 15 to 20 days, I'll be looking to take this off because because I don't know when that volatility is going to collapse in here. And if I wait and it already happens, then I'll never participate in the trade, right? So that's why. So anyway, that's the strangle. So now if you have the chutzpah and you have the margin in your account, it's really not, when you consider trading this and this being a swing trade, this is something I can actually hold on to as opposed to just being short or long. The futures contract, to me, much better place to be because I don't have to be right. My probability of being right is 74% because in this case, natural gas doesn't need to go up. It doesn't need to go down. I mean, it can actually go up and it can go down. And it can go up a lot. Going to 480 from 417 is a big move. Same thing on the other side. It's well outside the one standard deviation. So anyway, there you have it with that. Now, look, I'm not going to do this trade because I don't want to use $1,600. I'm just throwing it out there. Now, if I actually did, I would. So what we do is we actually go and we cover this so that it's actually manageable for us retail traders or us Johnnies, as I like to call it. And so now this is a much more manageable trade for most folks, right? So we do the 280, 270 on the put, and then we do the 480, 490 on the call side. We didn't really reduce our probability of profit much. We're at almost 70%. We're still delta neutral, and we do have a lot less theta. But as I mentioned, you don't really get a lot of theta burn. And then more importantly, you'd only use $200 worth of buying power. All right. And so this max loss of 810, the way they calculate that, because I know a lot of people freak out like, oh my God. So this max loss would be realized is if at expiration, your option or the strike price falls between these two or outside to where they're actually have to exercise them and all, but you're not going to hold on to that. You know, we might be in this for like a week and a half, and then we're gone. And even if it's at a loss, we're going to be out. That's it. Have a nice day. So anyway, that's the likelihood of that happening is slim to none because I'm not holding on to this until expiration. No way. I don't think I ever hold on to anything till expiration. So anyway, there's your trade, natural gas. I think it's a nice trade, especially again since it's kind of pumping and it's kind of moving, but we're not buying into the FOMO, and we're not like shorting it just for the sake of shorting it. We're kind of playing it the other way, saying, hey, look, I think it's going to be range bound for the next, again, we're using the February contract here. So February contract's got like 40 days in it. So spotlight. So anyway, there you go with natural gas. And the reason I do the natural gas futures is because I don't know if anybody else has tried. I can't stand this product, this UNG, because there's really not too many ways to trade natural gas. Let's face it, there's just not. You don't have a plethora of different ETFs and whatever. There's a handful of them, and they all suck. And this one happens to be the worst of all. This is the biggest piece of shit on the planet. And the reason is because I know it, because if you go back and look, this thing must have had at least, that I know of, at least 5 reverse splits because it was such a piece of shit. And it's only recently in the last 3, 4, maybe 5 years that it's actually had any kind of real significance. But before that, it was the biggest piece of garbage. And it still kind of is. And people still trade it. Now, I don't think they trade it because they want to. They kind of have to because there really is nothing else out there. And if I was actually as a trader, what I had done is because I really kind of feel like natural gas may be a bit ahead of itself here, I did do a little calendar spread in here. And then we'll bring up my positions. And I know I got it. Where did it go? There it is, UNG. So the calendar spread, now there are no March options, which sucks. There are no, if you look at the UNG. Again, the reason we're doing this is just as like an add-on to the natural gas trade. This one I actually did get filled on, unfortunately, but I did. But there are no March options, which kind of sucks. Oh, wow, there is March options now. Look at that. See that? They added March options. I was talking that, look, they're all 0. So they just added them. So there you go. So they added March options. So I can't even trade them. They have no bid. They just got added. Wow. I was just complaining about this yesterday. So talk about getting it shoved up your you-know-what. That sucks. Because I would have done a April March instead of an April February. Anyway, so there's March options. So I would trade the March contracts if now they're there. But I decided to do an April because they weren't there. And I did a 20. So I bought the 20 and I sold the February 20. And it has no bid. How about that? How the hell did that happen? That's why it sucks doing these. That's why it stinks doing these oh, those are the weeklies. Hold on. Hold still. There we go. There we go. I was going to say, there's no way that's no bid. So anyway, there's the trade, and that's actually right exactly where I got it. I got it at 70 cents. And so that is the trade in the UNG, and it's a bearish trade, like not overly uberly. It says it's delta positive, but look, this is generally I'm looking for the price to go down, and I'm looking to do this in a swing trade, and I'm looking to do this cheap. It's only going to run me $70. And it's one of these things where, look, if I'm right, I'm right. And if I'm wrong, so what? I'm out $70. Now, why am I doing calendar spread instead of just a regular spread where I actually do like a 2019 or 2015 or whatever, like a traditional vertical call spread? Because you have more flexibility in a calendar spread. And why? Bill, I have the opportunity to actually roll this. I can roll it forward or roll it back, and I can roll the expirations. So I can roll it. I have an opportunity to roll this now to March because they didn't exist. And I can roll it up or roll it down depending on where natural gas goes. If natural gas continues to go up, I can actually roll this put up and begin creating premium on it and selling premium on it and try and make money that way. And if it continues to go down, and it expires and it goes out of the money, right? And then, and the other option actually then I actually have more flexibility, right? That's why you do a calendar spread. It's really flexibility. It's not, because I don't know if I'm going to be right, and I don't like to be wrong. And this gives me a better opportunity to be right. So anyway, that's kind of what the other trade I did, natural gas. Little bearish trade in there. All right. And so, and then if we look at some other things like earnings yesterday, I didn't do any earnings trades. I thought they all sucked. They all stunk. Let's go into earnings because you had like JP Morgan, and then you have a couple this morning, and there was not really a lot to do. We got Morgan Stanley today. I don't know if they've released yet. It looks like they may. It's 8 o'clock, I'm sure. Let's see, Goldman Sachs. I would assume they're out already. I haven't really looked. I don't have any skin in this game. Bank of America as well. There was nothing to do in here. I mean, look at the IV ranks in here. So, unless the IV rank is over 50 or well over 50, I mean, I prefer it to be in the 60s and 70s. But for all of these, there really was nothing to do, and it kind of sucked. And there's really not a lot to do this week for earnings in any of these stocks that are slated to release. I don't think we get until next week. Let's see. Yeah, until next week. That's when we kind of get into some that are a little more juicy, like 3M. That's got an IV rank of 60. Charlie Schwab. I wouldn't really play Charlie Schwab's. That's a suck stock. That sucks to trade. Next week, UAL. That's a big one. I already have positions on in UAL. This is a volatility giant. Just the fact that this has stayed elevated, this IV rank has stayed elevated for a good amount of time, and it has not failed, and it has not collapsed hardly at all. Hardly at all. And that is one to me that's going to present a ton of opportunity next week to do some trades. I'm not going to talk about it here, but yeah, it's really not until next week until we get into some plays for earnings that really make sense. Outside of that, they all stink. Like, I'm not playing around with any of these. Now, obviously, if you want to do your directional type moves, this one's not too bad. Fastenal. The problem is like it's not that great of a liquid stock to really, I don't find it to be extremely liquid. And why? Because I go down here and I look, right? And these are the February options, and these are the ones you're going to be trading. Look at this open interest. It sucks. Like there's barely any strikes with over 1,000. And you look on the put side, there's like nobody on this side, right? And I like liquidity. And you have to always look at liquidity when you're trading options, because if someone's telling you to buy options on things and there is no liquidity, you're in a penny stock, because you could literally get stuck in this thing and not be able to get out of a trade. So that one's kind of a suck one. What else? That's really it. I didn't do a lot yesterday. Yesterday was pretty much watch and see. I still think you can sell options in Tesla as well. Over 500 and under 350. Over 500 and under 350. Now, if we look at Tesla, this is one that's actually has stayed fairly high in IV rank. I mean, look at that IV rank, still hovering at 87. This thing has had a couple of small collapses in volatility, but nothing major. And they have earnings coming out at the end of the month. And so if you're looking to do something in here, I don't think you're really going to get a volatility collapse in Tesla until that earnings cycle comes around. And I think by that time, even for a small trade, like I already have several iron condors on in here. And the reason I use the iron condors is like, look, we'll look at the one standard deviation strangle, which is the 330. And up on the call side, it's the 530. That's the pure one standard deviation strangle. I mean, look at the buying power. It is a buying power hog. So it's very difficult to do strangles in Tesla. I have done them before. I've never really been happy about it. It always just makes me uncomfortable. It always makes me uncomfortable no matter what the stock, having $8,000, especially in just one trade. You know, 1,000, $2,000, I can handle, spread my risk out, thin it out. But to have $8,000 in one trade is just, that's just a little overkill for me. So if you iron condor it and then you just cover the wings, you're talking about a much better, more manageable trade here, 71% probability of profit, absolutely delta neutral on this. Again, you're outside the one standard deviation, buying power $300. You bring in 115. That is a really, really nice looking trade. Thing is, and just keep in mind that you may not see really any volatility collapse on this until around the earnings come out. So you might be hanging on to this, and you actually may even take some heat on this, meaning that this actually may even go up because this volatility is likely to increase. But I'm just giving you an example of the kind of trades that you could do in Tesla. And then if you want to take on a little bit more risk, don't do the... It's always tell people say like, oh, so do I do one? Do I do three? If you want to do more, don't increase the contracts, increase the width. So if I want to take on more risk, I just widen the strike out by 5. So instead of doing the 535, do the 540. And then on the put side, do the 320. And then you can see here, my buying power went up, but also what I took in or what my max profit is also came in, but I didn't change my probability of profit. So I actually ended up taking on more risk by just widening the strikes and not taking on more contracts because it's cheaper. Because if I were to do 2 contracts, right, the brokerage firm's going to say, oh, yeah, okay, I'm going to charge you another fee for the other side. No. So this, you actually save yourself a little money in commissions. Again, if you want to take on more risk, widen the strike. So maybe you do them 15 wide, and you'll see that buying power go up. All right, so now I'm at 15 wide on either side. I'm bringing in $300, and now I'm up near about 1,000. And again, I didn't change my probability of profit. I'm still delta neutral. I also increased my theta a lot more because now I actually have more premium to actually kind of like burn down over the next 40 days or so. And this is what it looks like. right? So you got the 330, 315, 530, 545. Again, all viable trades, and each one different based on your risk profile. If you want to take on more risk, just widen the strikes. That's it. Don't take on more contracts. It's not feasible. It's much more efficient this way. So that's kind of the play in Tesla, because I don't really think, if you're going to actually look to, figure out where this is going to go. Is it going to bust out? Is it going to break down? I think the easier play is to say, hey, look, I think it's just going to sit in this range over the next 40 plus days, and that's it. Much easier game to play there, I think. And then that's kind of Tesla and what's going on there. Few other ones I thought looked pretty interesting yesterday was Google. I kind of like this, and I've been doing a lot of drawing on charts, and that's usually unusual for me. For Google, or Goog, whichever one, I think Google is actually a better, I think it's better for the options, Google, than it is Goog. It doesn't, I don't think it really matters, but anyway, I've found Google better, or Alphabet, or whatever, just call it Google, clowns. You have this thing at all-time record highs at 201, and you go and look at volatility. I kind of like this one. This is one of the few tech stocks. Is it even a tech stock? I don't even know. They actually put it in a different category. If we go in, let's go into TradingView. If you go into the heat map, they stick it under something else. And I was looking, I was like, what? Where is that? That's in that. I didn't even know that was in that. Because I don't know what sector things are. I don't give a shit. Right? What do I give a shit what sector it is? Oh, it is in technology service. For some reason, I thought I saw it in a different category. Maybe I'm just hallucinating. But I kind of like this for a volatility play, because overall volatility doesn't really spike in this stock extremely. You can see there's a few points where it has, but this is kind of about where it kind of maxes out in this 50, 60 range, and then it usually collapses. I kind of like this up here. I kind of like Google, scarily short. And if I was going to do something in the Google, and you could see, look, the thing is about Google too is tons and tons of liquidity, right? So I'm looking at doing a call spread, a bearish call spread. Not right. So I'm looking to do a bearish call spread, but there's tons of liquidity up here. At the 220s, you got 11,000 contracts. All kinds of liquidity up here. So we're good. We're good. One standard deviation. So, and I'm looking out in March. So I'm looking out past earnings, and I want to put this on probably today, because I just have, I don't know what it is. Let's face it. I don't know what it is. I don't normally do total directional plays, but for this one, I kind of want to get a little short delta in here. So one standard deviation brings us to 220. So I'm going to be looking to sell something at least 220 or greater, right? That 220 strike is a 16 delta. That's kind of in the wheelhouse of where I like to be. I like to be under 20. When I sell calls, I like to be under 20. Why? Because again, it gives me some buffer that if Google continues to go up, I'm not just going to get my face ripped off if I'm wrong. And also going to give me some time to be right. So I kind of like the 220, and to sell the 220, 230, it's 10 wide. Kind of like that call spread as kind of an opening trade. Now, you're going to use some buying power. It's probably best is if you're already long some stock. So say you are long 10, 15, 20 shares of stock, 100. if you're already long stock, which I am long stock, doing this actually helps that position because you're adding some delta, some negative delta to that positive delta trade. Because ultimately you always like to get right around neutral. That's kind of how you make money over long term, believe it or not. So this adds some short delta to my already existing. And you can see we have tons of breathing room on this one. 220 is all the way up here. Now, look, I'm well aware that Google can, rip 20, 30 points one day because, let's face it, whatever it is, what is it? I forgot what the quantum, right? What's the new bullshit technology lingo we can throw out for the noobs who have no idea about technology? It's quantum now. We're so far away from all this stuff. Like really, it just makes me laugh. Look, I work in technology. I see it. People say, "Oh, it's AI." It's like this stuff's been around for decades. A lot of the stuff that they're using even now has been around for 10 years. It's been around for 10 years. It's just now people are like technologically savvy on the user end to actually use it. That's why it hasn't come out, because basically people are too stupid. But the shit they've had has been around for 10, 15 years. So anyway, I don't want to get on a rant. So 220. So I kind of like that trade as kind of like an opener on that. And so a little short delta on Google, the 220, 230 call spread as an opener here. And you can see it's been beating its head at 201.47. Now, look, this thing has every indication that likely it's going to get up here and it's going to blow out, right? And it's going to have that big day, and then then what'll happen is hopefully when it gets up to like maybe 210, it kind of exhausts itself, beats itself up, and then grinds down. I don't know. Anyway, so there's Google. Now you can quite easily do both too, which this sets up really interestingly that you can do, like you can even do a strangle in here. So if you want to do the 220, because the margins are relatively decent, you could do like a 220, and I would do the 170. And you're going to bring in $400 on that strangle out in March. You're going to use $1,900 worth of buying power, but 74% probability of profit. And then quite honestly, you're in a better. Now, the reason I'm not doing this is because I am already long stock. So my long stock is equal to having this short put. That's what you have to remember. So having this short put is equal to being long stock. All right, and I'm already long, so I don't want to get any longer. Wow, that's a good problem to have. I'm long, but I don't want to be longer. Anyway, that's why I'm not doing this. But if you don't have anything on in Google, this is actually the trade to do. Would be the 220 170 strangle, and I would try and do this. I would try and squeak a little bit out of this. Do this for 420. All right, and 74% probability of profit. It is pretty close to as delta neutral as you can get. You have a decent theta in here. You're out in March, remember. So this has got some time to kind of like burn in, and then you're going to use about $1,900 in buying power. So I also don't think that's a bad one as well in Google. The other one I was a little bearish on as well is Microsoft. And I was actually really, look, I don't paint charts. And look, I don't have nothing against anybody who sits. I guess my biggest issue with people who paint charts is they never say what to do. And so you paint these charts up and you spend all this time broadcasting and everything else. But then you never say oh, hey, all right, by the way, so this is what a chart This is what I think they see the chart doing. Here's the trade that I might want to do. Never see anybody do that. Never see anybody do that. It's always like, oh, well, this is an ABC. This is whatever it is. Who is it? Elliot, Elliot Gould, or whoever the clown is that made up this whatever. And then I was actually really proud of myself that I did this. Because I never do this crap. I never do this stuff. But it looked so good. I was so proud of myself. Because we're all looking at the same charts, folks. Let's face it. Everybody you see out there, they're all using TradingView. They're all using, the same indicators for the most part, right? The RSI and the, whatever else they're using, the MACD, and what's the other one I see out there? What is the other one? The TTM squeeze, or I mean, it's fine. I'm laughing about it. It's fine. If you want to use that stuff, go ahead and knock yourself out. Have a good time. I'm sure if you actually look at it and study it long enough, it'll make sense. Which I know people personally who use all those things. When they talk about it, my brain just turns off because I just say to myself, so basically, you're following an indicator that is trying to extrapolate basically time, price, and volume. And so then why don't you just use time, price, and volume? And then maybe, instead of having this other thing. So anyway, and then the other one that's not really factored in to a lot of these indicators is volatility. And let's face it, volatility is what actually presents opportunity. Anyway, with Microsoft, I'm kind of bearish on Microsoft, just given that it's kind of stuck in here. And my thing about Microsoft, other than really Azure and the Azure cloud, where's the catalyst for Microsoft? Where is really going to be that, I don't know. I don't see it really on the horizon. I think earnings are going to have more to do with a lot of these technology stocks than just hearsay and AI right now, because we kind of went through that. We just went through that, right? And now it's like, okay, we have this great technologies, but are you making money? And so with Microsoft, and this is another one that's harder to trade because the margins suck. And there's really no volatility in it. But I have no problem going out to March here in Microsoft and doing a little put spread. And I kind of like that when I do a pure put spread, I always like to be in the money. Just be sure, be in the money. Now, I know it's real sexy to go in and say, look, I'm going to buy the 410, 405, and I'm just going to roll the dice and then just be like, yeah, I'm going to look and, I only spend $70 and I can make 400. Well, the one thing that you're not factoring in is that you're going to lose literally 5 cents, almost 5 cents a day on this for every day it doesn't go in your direction. And I don't really want to be in that place. I would rather have a little bit of intrinsic value and go in the money. I usually like to stay in the 60s when I go with a pure put spread. And this is really nothing more than almost a 50-50 shot. You could see if I do a 440, 435 put spread in March, I got a probability of profit of 58%. I'm only going to use $200. My max profit's $218. I'm basically shorting, it's almost like shorting 5 shares of stock. And very simple, straightforward trade. Buy the 440, sell the 435 in March. Have a nice day. You have intrinsic value. You have a little bit of time for this thing to kind of go. You have basically 20 points, 25 points or so. Or no, 15, I'll be all right. 15 points or so for this, like as a buffer, even more so. Really, you don't really start losing money on this until it reaches like 437 and whatever. So again, just a real straightforward one in Microsoft and a directional play. All right, it's 8:30. That's really all I got. So I thought I threw out a lot of trades today. And for those of people on TikTok, even though it's going away next week, you can find me on YouTube. Been there a long time. And that's really it. That's all I got. And so if anything, have a good one, and I'll catch everybody tomorrow. Oh. All right.